Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, August 25th, 2022. It's 11:34 a.m. Eastern Time as I'm starting the video, and we'll do coverage in this order. Do a quick update on the equity markets, primarily focusing on the Qs, Nasdaq 100. Got an update out to you today, and I'll cover a couple different other time frames in addition to this 60-minute chart we're looking at. Quick update on gold. I want to point out Treasury bonds, potential trading op there. Update on the hooved critters, that's live cattle and lean hogs. New sector looks an attractive swing shorting op, and that's the utilities. XLU is the ETF there. And then finally, I want to do an update on natural gas, a potential setup there as well. All right, starting out QQQ, really not much more than this is about where we were this morning. Give you these levels, same chart that I posted before. Several versions of this before I left on vacation last week. And as I said this morning, we hit that 314.65 target on Monday. Traded there all week. That's a reaction. I define a reaction as when you're going down and you hit a support level. A reaction is either a consolidation or a bounce. And so far it was first a consolidation, little sideways trading, popped up today. So still a reaction off that level. Doesn't have to be immediate. Sometimes it consolidate. And like I always say, support is support until unless broken. So we pretty much danced on it all week. And as I said this morning, any bounce back to 319 and/or means you can short there, and then you can maybe half a position, let's just say, and then a second half there if that's where you want to hold out for, or you short a full position. Again, it's up to you where you think things are going to bounce. But traders will always cue in on these gaps, and so far they've stopped it. There's the gap I'm talking about. What is that? Friday to Monday's gap. Yep. Friday's close, the gap down on Monday. And so far, we've run up to the top of that gap where the sellers have met. Now, I'm going to go over some shorter term charts. One other thing I didn't cover on that chart this morning, I meant to point it out here. You can see I have two lines down here. There's actually three horizontal lines on the PPO. There's a zero line by default, that's right there. And then below that, these are where I define the trend in QQQ, at least as of late on the 60-minute time frame. Meaning when the PPO, I like to use the signal line, the white line, last altitude across. When it's above that line, your trend is bullish and things are going up. When you cross below, you get a bearish cross below those lines, and sometimes it's the purple, sometimes it's the white. That's why I have both there, but then that captures downtrends. And most of the last few months that we're looking at here, we made a bullish cross here. We were long at those lows, but then that just helped to confirm a trend change and told us all along be long and strong until recently. And we just recently had a cross back down below, and we're back testing from below. So this is something to watch. Usually when you cross below or you're trading below, bounces back to that level are objective shorting ops. And right now we're right about there. So but when we zoom in on a kind of a more micro level, I'll go to this 5-minute chart. I've been watching and trading off this today. You can see I have that same, there's the gap right here. There's Friday's close, that's the top of the gap. That's where we gap down to on Monday. So there's your gap box, if you will. And they tried to enter the gap. The buyers, they got smacked down, rejection. But this was and is a level. This pop this morning gave us that rally. So you can see these reaction highs here, here, and that's 317. So that's support. And so I figured, after the rejection off the gap, we pulled back there. And as expected, so far a little bit of a bounce. You can see the buyer stepped in on that 317 level. I also have this moving average on the 5-minute chart, a 200 period. Does a decent job of tracking short-term trends, but not perfect. When you're below it, bearish, above it, bullish. And so I'll tell you what, 6 to 1, half dozen to the other. But let me just say this: Jackson Hole tomorrow. Market will go kind of probably slop around, trade around a little bit sloppy. You can micro manage those trades if you're an active trader off these short-term charts, 5, 10, 15-minute charts, NQ, QQQ, or whatever index you're trading. And then when market's waiting to see what Powell says. And so I just wanted to say it may be a little kind of a grind until then, but here's your levels to watch. 317 is now is support. It was resistance, broke there. Next support down here is really the bottom of this trading range. Let me box it in for you last few days. Remember, that was a consolidation on that target I just showed you on the 60-minute chart right there. And so the top of that is support. If we fall back into there, we're probably going to run at the bottom of it, and then a break of the bottom would also be a sell signal there. Again, that's on the 5-minute chart. What I said before on the 60-minute chart, those are the levels to trade off. We'll go back to that, and then one more time frame, and then we'll move on here. All right, so 319, if they can pop that, today's highs, and enter the gap, and gaps once entered, not by a brief little pop that got rejected. You can see that 60-minute candle, and this is what you look at. When you're trading a 60-minute chart, all that matters is how that candle closes at periods, the end of that 60-minute candle, and that's the fat part, the body. The skinny part tells you what happened in that 60-minute period, and so it was a rejection, and then you close back down below it. So that was not at least on this time frame, a successful gap entry, if you will. Just popped it intra-period and then failed to close in. And again, don't it doesn't have to be literal. I mean, that's a general rule of thumb. You could have printed the candle here, and then the next candle got smacked down. It would have just been a little whipsaw. And there's no guarantee, but I'm just talking probabilities. That's what I always speak in, not possibilities, because anything's possible, but what's most probable. That's all we can do in trading. Play the odds. And so if they can enter the gap, they may run at a gap backfill, which would be up around there Friday's close. This is that primary trend line, the primary trend line off the highs. That's the right here in the Nasdaq 100 when it peaked. And remember, we had that little whipsaw false breakout there, as I suspected it would be, meaning false breakout, you broke out and then failed. And so this is a big fat check mark for me for the bearish case, the fact that that breakout failed as anticipated. And bear traps are pretty powerful thing. I'm sorry, bull traps, bull traps. So I still believe, and if charts convince me otherwise, I'll let you know that we're headed to at least the primary uptrend line, and I'm still open to the fact that the highs from a week or so ago may prove to be the end of a bear market rally before the next leg down that takes out those lows. We'll see. Right now, I'm just kind of going day by day and week by week, but in the coming days and weeks, I think we go to this level. Like I said, we either get rejected and stop here, continue on lower, or run up here. There's another gap up there, and of course you have reaction highs and other resistance levels. So we'll see. I think we'll have a better idea after Powell speaks tomorrow, and then of course that's Friday, and then you have 2 days to go home, and there's the 2 extra days of overnight risk, and so you may want to lighten up if you're not an aggressive trader, as most swing traders, more conservative swing traders might do over the weekend. Okay, sticking with the order I gave you before, this is gold. We're going to go to the daily chart here, zoom in. A little bit of a busy chart. Let me just draw the lines over. I need to clean it up. Well, there's a lot on here, and I don't want to remove some of this. Forever and a Day, way back then, when after gold peaked a couple years ago, had a significant top. We have labeled a buy zone here. Every time we get into that buy zone, it's a long-term buy zone. That's it. We're simple. So we hit the bottom of that buy zone just like we did back here, followed by this big rally here, followed by that big rally, and we hit the bottom of the buy zone here. So that's significant. But let's take that off. And one of the other significant things on this chart right here, you have this downtrend line right there on gold, and there was a breakout and a back test, so far successful because we're moving higher. You also had some divergence there, or near divergence. The PPO was close to, made a slightly lower low, but you were oversold. Either way, we bounced off that trend line. I would like to see this PPO cross over here and start moving higher right there. That's also a decent, the zero line that is, over that dotted line there, because you have the same thing. When you're below it, trend tends to be bearish right there like it was. When you're above it like you were here, the trend tends to be bullish like it was there, right? and there. So that's one thing that I'm on the lookout for. Gold's kind of been just grinding around for a while. It's been in a intermediate term downtrend for sure. But when you roll back in time and take off all these lines, let me go to a weekly chart. You'll see it a little bit better. Um, that's it. So this was a bull market in gold right here, bull run. There was a period of consolidation there for a couple years. Then you had the bull run, and this is consolidation. Um, and I believe it'll be resolved to the upside where the bottom of that buy zone right there is the bottom of this whole range here. And so as long as gold stays above that bottom of that buy zone, it looks good, but it's certainly been more of a swing trading vehicle, right, than buy and hold, and it doesn't pay dividends. But like I said, as of now, looking good after that back test, I think, on the trend line. Not crazy about it, but still looks good. And then, of course, a lot of you aren't in gold. You like to play the miners like I do as well. I'll do both, gold, silver, palladium, platinum, whatever. I'll trade the metals on their own charts. Gold and silver tend to run together more so than palladium and platinum and the other precious metals. They're more, even though they're considered precious metals, they have more of an industrial application, palladium and platinum. So there was our wedge. There was positive divergence on GDX, the breakout. We put in a higher low so far, so what we need to do is take out this high, and we'll have the early makings of a new uptrend. The fact we broke out of that falling wedge type pattern there in the downtrend line after the divergent high, just like you had, I'm sorry, divergent low, just like you had a divergent high back there when you broke up. This right here. This is pretty much this in reverse. This was a bearish rising wedge with negative divergence, right? Broke down, impulsive candle, everything you want to see on a breakdown. The more impulsive, the better. That big red candle showed you that was an impulsive breakdown, likely to stick. This so far was not very impulsive. You broke out and you back tested, but you had a successful back test. And again, we're stair stepping higher, not very fast. We're going to need to see that high get taken out. We're going to obviously need to see gold move up. And then I still maintain these targets that I gave you before on GDX. Next up, I told you I'd cover Treasuries. That's you have two options. Trading those, you can use TLT, the long. I'm just looking at the long bond now, the 30-year. This was recently thrown out here as a long trade idea. Hit our first and second targets. Then it was actually a short trade idea. That was a pretty significant resistance. Then you had so you could have shorted there if you got after getting out of the long, and or on a break of that trend line, broke down back test. We've been moving lower. However, I'm seeing this PPO turn up. I'm expecting a rally. I went long Treasuries earlier, and via ZB, which I'll get to in a second. I'll show you why. And I think we're in for a little bounce. Not much. I'm looking for a little bit of a bounce now. I may trail it up, but you know me, I'll probably just get out if we hit that level. I'm going to show you some levels on ZB and the daily chart of TLT here in a second here. Here's the 60-minute chart. Oh yeah, that's what I meant to say. I'm going to show you targets on the 60-minute chart and levels here. There's a bullish falling wedge. This was the my reasoning for taking a long position here. At support, you had some reactions here, major reaction low right there, and that's about 110.87. We'll call it 111. And so you have that 60-minute wedge right there. We haven't broken that, but we did break out of a wedge on ZB, which I'm going to get to in a second. There's that some. I'm going to put a line there. Let me do that. I don't have it on here on TLT. If you can see, I'm going to zoom in tight. You can see a big old gap right here and a lot of reaction lows. There's the top of the gap, so it's more of a resistance zone. I think we can pop up there for at least a quick bounce trade. If you take the measured move of this wedge right here, I need to clean the wedge up right there, tighten it up a little. But you take the widest part of the wedge, which is from here to here, add that to where it breaks out. That'd give a measured target. A little sloppy. There's not a super well-defined resistance level, but I do think I will probably, get at least a move up here to that 114.86 level. Look, it's ZB. I know from the comment section most of you don't bother taking this. Long-term, but government bonds don't move much. It's up at 1% today, and that's usually a decent move in TLT. But you leverage up, and that's why Most traders that trade treasury bonds are going to use the futures because they're already leverage built into those, and your broker will allow you to buy a lot of it because the margin requirements are very low because treasuries are not very risky. Stock futures, or especially natural gas and crude oil, those futures have higher margin requirements because they're more volatile. There's your downtrend line, little wedge I just spoke of. There's the breakout candle. There's the positive divergence, and that's 136.80 right there. That was support. That's where I grabbed it today and then added on the breakout. And so you can see some near-term target levels, but I'm sort of favoring, leaning towards a move right now up to there at about that 139, 313 level. So for the time being, I'm going to let that one ride with stops a little bit below entry there. Okay, LE, let me make sure that one's up to date. All right, these are lean hog futures. Let me make sure that chart is centered for you so you can see it there. Let me drag that bottom, fill the screen. 1 second. There we go. This is a 6 month, 2 hour candles right here. You had this big old, you've had divergence building for quite a while, negative divergence that is. And yeah, this big old wedge right there, and you broke down recently, back tests have been moving lower. And this one, no change in opinion. It's probably headed lower, but cattle and hogs tend to move together. Not always. Sometimes they can do their own thing. But I'll show you because I threw this one out as a short trade idea along with lean hogs. But let me show you lean hogs, which I went long on this morning, and that is HE. So HE, I'm starting out here on a daily chart, 18-month candles. I'm going to move that chart, try to fill the screen. A lot of these charts got resized recently. All right, a daily chart, HE, lean hogs. 93.72 or so, have that as a support level because we had a couple major reaction highs there. Big old gap, top of a gap right there, some support there. It seems to be a level that's active support. PPO is pulled back to that zero line. Remember, when it's above it, you're typically in bull territory. You tend to bounce on back tests to it once you cross above. So if we can bounce here, and remember, it was just recently a short, so if you're in it, you may want to cover. I would. I'm long, so only makes sense. Here, this is that setup recently was right here. You had that bullish rising wedge pattern, and then we broke and back tested those last time I showed it to you there. We also had a little head and shoulders right here. You can see the marks. LS means left shoulder. This is the neckline right there. Here's your left shoulder, there's your head, right shoulder, perfectly symmetrical one. Impulsive breakdown, you back tested the neckline, move lower. So I think that the correction has played out and then some. So again, and it's at support. So and it has positive divergence. So that's where I'm long. I'm looking for a bounce up here, back to at least 92,600, possibly a little higher. And they can either take quick profits, or when it gets up there, just raise your stops and let it run. Remember, we're in a inflationary environment. Commodities are very, very, very much in a bull market and a bull trend. They've had a correction lately. Nothing goes up forever, and so for swing and trend traders, might be time to start getting back into those if you've taken some profits, or if you missed the initial surge. You can look to strategically or tactically enter into long positions if you're again a trend trader. Swing trader, I'm in and out. I don't care long, short. I'll pay attention to the prevailing trend, because on short trades you're not looking for as big a corrections, and on the long trades you're looking for oversized bounces, if you will, based on divergences and everything else. Well, let's go over the sectors of the S&P 500 today. There's 11 of them, and one that stands out, probably one of the better looking short ops right now, are utilities. This is a busy chart. I didn't really clean it up. All I did is I added this divergent high. See, we made a slightly marginal higher high, new high above that previous high. It's been a heck of a run. So number one, we're very overbought. I'm going to circle overbought here. Last time we were overbought was right there. Then we were overbought here, and you can see what happened afterwards. That's where I'm going. We were overbought there and with divergence, and you can see what happened, right? So it's simple stuff, right? Wash, rinse, repeat. I would say overbought is not a sell signal, but it's a condition. Conditions are usually followed by corrections. Just like negative divergences or divergent highs are not sell signals in themselves, but they are also a condition. Shows you momentum's waning, and that's usually where the corrections come from. Utilities, they're probably the most stable sector in the S&P 500. They don't go up very fast. They don't drop. At times there can be volatility. You can see the chart. It's very swing tradable. Just eyeball this chart and look at these, uptrends and downtrends, and they're pretty, one-sided trades. You're either going up lately or you're going down. There are some periods of consolidation, but a lot of pretty good and fairly well-defined trends, right, to trade. And so there's our last up. That's about as big as I've seen an up in years, and we just broke the trend line, the primary uptrend line. So that is currently an objective short entry. We broke it when I was, on vacation. That was earlier this week on Monday. Big powerful sell signal. Little flagging action here, just like I pointed out on the cues today for you. There it is. There's a little move down. Flag would take you down to this first support level here, 75.38. We'll call it 75. And then a break of that. I'm going to give you one more level. I can see a nice potential target because this was a pretty powerful trend. And I think we'll, even with a little reaction there, I think we'll eventually take it out and come down here to 72. You want to juice it up. There might be others out there. I haven't traded utilities in a while, but this one back in the day I've traded before. And it's SDP. It's the ultra short utilities. I'm pretty sure I'm almost certain it's 2-time inverse. So 200% short. A little bit of leverage there, juice it up. And just like you have negative divergence on the daily chart of XLU, the utility sector ETF, you have positive divergence here. And you can align the targets off my XLU chart. I could tell you right now that'd be a nice swing up there at about 1236. And again, you're not going to get rich quick off utilities unless you overweight the position, which you can because there's not as much volatility or risk. So it's a 25% gain if that target's hit about 1230 or so right there. Last but not least, I just wanted to give you an update on natural gas. Just resizing this chart as I'm talking here. Fill the screen. This is a 6-month chart, 2-hour candles. And last time, as pointed out, you had this was a divergent high right here, right? DH, divergent high. You had a little minor uptrend line that was broken. Powerful correction, boom. There was that first divergent high. Then natural gas made another thrust up. Put in another divergent high, followed by another correction, and then finally all the way out here, that was your final divergent high. Then this trend line broke, and you had a drop in natural gas, which is like all other commodities in a bull market. But bull market corrections, the higher you go up, the higher you fall. That was a 45% drop, almost. Natural gas got cut in almost half, but it was just a bull market correction, and we traded it. We were short early on that and caught a good part of it. Then went long, but that's pretty much it was a divergent low, and then we started this new uptrend. So now what you have here, I'm just nice, clean, big old rising wedge pattern, complete with divergence. I don't know what's going on today. A lot of my divergence lines are disappearing. Well, maybe I had it drawn in earlier. There it is. It actually goes all the way back to that point right there. There's our divergence. So it needs to take that level out. I'm going to zoom in. I even have a price alert set on this one to tell me when to get in. I had to update this chart because the futures have rolled since my last one. There it is on a 60-minute chart. So here's where I'm going. The BOD line right here, benefit of the doubt. You've got a little bit of support right there. So there's the wedge line, but I think when this level goes with conviction about 892, 893 right there, that should open the door for a pretty good move. And based on the size of that wedge, the scope of that pattern, could be a big one. Now we could have another, little correction with another thrust higher that extends the divergence. Either way, it's a nice looking setup. So I'll update that one as soon as it fires a sell signal. But keep watch out, and remember, you might want to not jump the gun on natural gas. This one can cause you pain if you're long too early or short too early. All right, that's what's standing out today. I'll wrap it up here, get the video out to you guys, and if I see anything else, I'll let you know. This has been Randy Finney with Right Side of the Chart. Have a great day.